Good morning, traders. It's 8:01 a.m. Chicago time on Friday, the 5th of August 2016. It's non-farm payrolls day today. Happy Friday. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Of course, the key element that is driving the market and has been for the overnight session release, waiting for this non-farm payrolls number, came in at 255,000, 255,000, beating the estimate, beating all expectations so far, and by a lot, actually. It's a blowout number. It beat it by 75,000 jobs. The expectation was 180,000, estimate based on Bloomberg. Not only that, but hospitality and healthcare showed the largest job growth for the month. But also, it's not accounting for jobs like Uber and Lyft and these what are called professional temporary jobs. So the numbers may be slightly better than actually what's already been shown. The gains are in confluence with or reverse pattern that we had in May. Um, so we had a big swing in May, a big down number up in June, and the July report was supposed to be in line, and it actually beat by a lot. Also for June, the number was revised up 5,000 to 292,000, and wages continue to rise. This is all parcel, uh, part and parcel of an election year, of course. The Fed funds futures are now pricing in a 50-50 chance of a rate hike in January, um, as opposed to that being in December. So this is all setting up to be an interesting day today. We'll take a look at the details here in a bit. Other news, most recent survey in Germany shows Angela Merkel just losing support based on the most recent attacks in Germany. Her ratings have dropped 12 points to 47%. This is the lowest they have been since her reelection. And also, Goldman Sachs has indicated that it has to change its business structure in the UK based on the effects of Brexit. This is the first move by a financial institution as a result of that vote. And that's really it. Those are the key driving. Uh, that's the key driving news this morning. We see money moving out of gold. We see money moving out of the British pound, the euro, the Japanese yen, the bonds, and the tens, as well as the bunds slightly. The question we always want to ask when we first come in or when we're looking at a market to formulate context is which way is risk moving? Is risk coming on or off? And clearly, risk is coming on. The Euro stocks being strongest this morning, pushing about 0.9%, up 26 points at 29.51, followed by the DAX up 0.74%. And then, of course, the mini Dow, the Russell, the US dollar, the NASDAQ, and the S&P, the S&P being the weakest of the bunch. Even though we're trading at 2167. So overall, the market is moving to risk this morning, and of course we would expect that on that non-farm payrolls release, kind of blowing out the expectations. So there was also a comment that OPEC is planning to revive oil production freeze talks. OPEC officials reportedly cite Iran higher levels of crude production as a positive sign freeze talks could be successful this time around. Iran is back and producing at 3.6 million barrels per day. That didn't take them long to get up to the high level. Of course, these countries are fully dependent on their oil revenue, and so they keep producing more as price drops. They keep producing more, which forces price to drop, and they're in this quagmire of the inability to control their appetite for oil revenue, and therefore oil prices keep dropping. Very tough situation for those guys. So let's switch gears and look at what we're expecting for the rest of the day. The key numbers are behind us. What's left today is the Baker Hughes rig count, which has not been really all that important. That comes out at noon Central, 1 Eastern, and consumer credit at 2 p.m. 3 Eastern. Consumer credit is expected at 16 billion. And that finishes up the week. Let's have a quick look at our routine review, which brings us into review the hypo ideas from yesterday. This is an image of yesterday's trader bite. As you can see, the expectation was for an open auction, a drop towards the point of control, 2153.75. Remember that number, 2153.75. And then I was expecting a rotation back out, and then I expected the market to start backfilling some of the sell-off the other day. Remember, I talked about, I'm not sure if it was yesterday or the day before, I talked about the idea that this is likely to backfill this sell-off. And so that was the plan yesterday. I expected it to push all the way back up to 2164.25, the overnight high, which coincides with the high of the sell-off day. That was the primary hypothesis. And note the turning point was the point of control. That was basically what worked out. If we take a quick peek here, let's cheat and look at what happened. And you can see here, open auction, sell off to within a tick of that point of control. The point of control at 2053.75, it stopped at 2054, turned around and back up. Remember the target there yesterday was 2164.25, got to 2163.5, missed it by 3 ticks. And spent most of the afternoon inside of the opening swing, forming a what looks like an absolutely gorgeous balanced profile there, something out of the textbooks almost. So this, the primary hypothesis, is the hypothesis that worked yesterday. In case you're wondering, this is a check mark. Anyway, just having a little fun here. But overall, the primary hypothesis was in control yesterday, and that's 2 days in a row for the primary hypothesis. It's been a miss for quite some time. Remember, I said yesterday, if we get an open auction and we push up early and find sellers, then we're likely to push down to the point of control and then continue down to 2149.25. That didn't happen. We did get a push up, but overall it was an open auction, drop, then pop. And so Hypo 2 which was the opposite of Hypo 1, did not materialize. Something I want to point out to you here. Notice how orderly the market is. The auction becomes much more orderly or organized, or becomes better organized once we have a sweep or a correction. I don't want to call it a correction because it makes it sound like last August or something. But essentially, when we're in this grindy, low volatility, low range, low volume rally mode, which investors love, the OTF loves that because you're creating value out of thin air. And you don't have to do anything. It's a buy and hold market. That's why volume drops. That's why volatility drops. Money is not stepping in or out of the market, and or relatively large sums of money do not. It's essentially a mutual fund's wet dream. So in that environment, generally we don't get a good auction. There's not very much rotation or testing. But once that clears out, and it did on Tuesday with this drop, you notice that the auction becomes much more orderly. Look at the low. I discussed this yesterday. The low on Wednesday was the point of control. The low yesterday was the point of control. This is behaving as we would expect, opening in range in value. So we would look for a test of value high, which is right here, which was tested there and there later, or a test of the point of control. Failure at the point of control will likely push up to mid and then move down to value low, and then we expect it to bounce around and decide what it wants to do next. That's what an orderly auction looks like. It is testing those levels very clearly and cleanly and creates much greater opportunity, at least for the way I approach the market. And of course, the way I approach the market is not necessarily the way other people make money. There are many different ways to trade, but I just want to point out how the auction is much easier to read once we've had a flush. Once we go into rally mode and start to do one of these zigzags all the way up, it becomes harder to read. And essentially, that's what we've had for the last 3 weeks of July. The last 3 weeks of July, what you saw is buying pressure coming in and then fizzling out. Essentially, July was one of those months where you just faded everything. You just had to fade new highs, new lows, fade tests, fade, which means that any type of trend or any position you take that looks for a push in a directional manner is is most likely going to get hammered. And we saw that in our automated system, but that's a market that generally lasts a short period of time. 3 weeks is really not that big a deal, given that it is that time of year for that to happen. So what my point is, this is ideal. This may look choppy and boring and deadly, but I'm only looking for 1 or 2 setups a day. I generally get in a normal market, I would get 5 to 6 setups a day. On a market like it is now, I'm only looking for 1 or 2 really strong setups a day. Very low volume trading. And it's just the way it is for the summer, and that's what I've been warning about for the last 3, 4 weeks. The overall profile was absolutely beautiful. Look at that. Value is almost symmetrical around the point of control. This looks exactly like a histogram you'd get out of a statistics book. This market has found consensus and loves these prices. We're at 2160. Now, notice that the point of control, 2159.75, let's call it 2160, is essentially in line and is behaving as expected, as you have seen in webinars 1 and 2 on my website. Look at what we've done. We've moved the point of control way down on Tuesday, then we move it back up. We move the point of control right to the value high of Tuesday on Wednesday. Then we move the point of control again up. We have positive migration on the point of control, and now it's in line with the MC point of control. Remember this micro composite? Look at that point of control, 2160.75 with yesterday's point of control at 2159.75. We're back in balance, and essentially this morning we're popping up here at 2166.75. By the way, the scene of the crime, the SOC for the non-farm payroll release is 2162.25. The low of the non-farm release is 2160.5, right there at the MC point of control this morning, and the high is 2168.25. We're currently trading 2167. So guess what? We are trading on the other side of the MC point of control. We're trading in a gap. We're trading, however, inside of this balance. And so the primary hypothesis is most probably going to be an open auction and reversion back, also called responsive selling in this situation, back towards the 2060 point of control, MC point of control, and yesterday's point of control. Let's review that in a second. We'll revisit the hypotheses in a second, but I wanted to show you the big picture. And when I add in yesterday's volume here, as we scroll forward, when I add in yesterday's volume, watch how the volume increases towards the point of control. This is a market that is balancing out and is filling in the middle. We basically fill in this area here with a potential for a VPOC shift if we continue to trade there for another day. So we are stuck in here. These are our limits, 21.49 and a quarter up until about 2165. That's our groove right there. That's where we are. Currently, we're trading just above it, so the expectation is that we would break through and start trending towards 2160 this morning, if the auction was to proceed as normal. However, because the number is such a blowout, it really didn't move that much. Remember, from the scene of the crime, from the point from which the number came in, the price we were auctioning when the news came on, it only moved 6 points. It's exactly 6 points. So from right here, the scene of the crime, right there, to the high, 2168 and a quarter, just 6 points on a number that was better by 75,000 jobs. In normal circumstances, or at least in the last few years, that would be a good 12, 15 point move, but it just isn't there. The participation isn't there. However, this is a fundamental number, and as we come in, the moves in the treasuries, and so on are likely to dictate that the money is likely to move into stocks or could move into stocks. So because it's such a blowout number, but for the moment, we see that the market really didn't do much all evening, essentially trading sideways as we anticipate the non-farm payrolls. We've broken out and we're pushing against highs. So this non-farm payroll release is creating a classic impulsive pullback continuation type structure. The pullback was to that prior high of 2165 and a quarter, and it's likely to push this high. And in 12 minutes, the market opens, and we'll see what sort of structure we'll be in at that point. If it has already pushed the overnight high, it creates a better chance for the short back towards yesterday's range. So the primary hypothesis this morning, open auction, we are inside of balance. Open auction, expecting a break of the overnight high. I'm looking for sellers somewhere up here for a rotation back down into the 2160 area. Initially, we might hit that 63 or so, pull back, and then push into 2160.75. That's the ideal day trader situation there. Not pointing it out because it's ideal. Only the hypos really don't look at what I want. They look at what's likely to happen in the market when we open. So this is basically looking at responsive selling. The overnight inventory is long. However, the overnight inventory is long due to a fundamental number that was a lot stronger. So it reduces the probabilities of responsive to about even. But if the auction was to proceed as normal, this is what we would expect. We'd expect the market to check prior balance. Remember, we are in a balanced range, and that's what's governing here. We'd expect the market to check prior balance before continuing higher. The secondary hypothesis, of course, is open auction, attempt lower early, leave a gap, and then start to trend up, and then the target becomes that 2172.75 all-time high on the day session, and that would be hypothesis number 2. Again, this has an equal chance of happening as well. So there are other possibilities here. I've run out of time. There are other possibilities, including the idea that we are opening in a gap on a big number release, and we can have a higher probability of an open drive towards the new all-time highs. However, there's a lid on this in the form of the Fed. in that with the number being that strong, it creates an opportunity for, remember, the Fed's mandate is inflation and employment, and this is the employment component. So it could create a lid in that it creates an opportunity or a better chance for the Fed to start expanding, increasing interest rates. So overall, it's hard to tell this morning how the market's going to respond, but look out. We are opening in a gap, and so the potential for an open drive or a driver to come in, an open drive, open test drive type open, is a higher probability. Are you confused by these terms, open drive, open auction, all that stuff? Just go to futurestrader71.com/glossary, and it's explained in there. I want to leave you with a thought. I know I'm going long here, but I want to leave you with a quick thought. I want to make sure, this is a question I asked in our Stage 5 chat room, forum, whatever. Uh, the question is, what is your focus this week? What is your focus today? What are you working on? What are you deliberately checking or working on as far as trading right now? If you cannot answer that question in an instant, then you're not preparing for the week properly. Every week you should have a goal. This week I will commit fewer errors, and this is how many errors I normally commit. This week I'm increasing my expectancy by a quarter of a tick. This week my goal is to have a streak of 3 winning days in a row on a minimal number of trades, whatever your goal is. But right now, at any given moment, if you're in my prop shop and I walk by and I ask you, what is your deliberate practice focus today? You need to answer that without taking a long pause. So it's really important for you to know what that is. If you don't know what that is, then you're essentially just floating around along like that movie Castaway, just on a raft without a rudder and just kind of hoping that the waves take you in the direction that you want to go. Unless you take control of that by setting goals, figuring out where you've been, and setting out where you're going to go, and setting goals in that direction, it's really important for your development because you're losing something that cannot be recovered. You're losing time. It's one thing to lose your trading account because of poor risk control. It's another to lose time and not get anything out of it. Anyway, I'll leave you with that thought. I want to remind you, please hit the like button. It helps me get more bandwidth and more services out of YouTube, which help you get a better quality broadcast. Good luck today, and I'll catch you on Monday. Take care.